So we're on page 21 of the Pub 17. We're going to talk about who has to file a return, who's required. In our example from our homework, if no federal tax was withheld, that person may or may not have had to file a tax return. So we're going to identify filing status. So everything we talked about on Tuesday, we're going to get all of that stuff, and even with withheld, the W-2, how we put that on the form, we're going to get deeper and deeper each session into the return. We're going to do the filing status. We're going to determine who is a dependent and can I claim this person as a dependent. And we have an IRS dependency worksheet, and that I uploaded into that was uploaded into the chat boxes. And then we're going to do a couple case studies, like this is the situation. But we're going to talk about who has to file a return. So before you choose a filing status, you want to identify any dependents. You have to, students, who has to file a tax return. So the general filing requirements for 2024 is if you were single and under the age of 65, you had to file a return. The filing statuses can be single, married filing jointly, married filing separate, head of household, or qualifying spouse. So we talked about those a bit last time. What each of those were. So the general filing requirements, again, single, unmarried person, single, married filing jointly, married couple, married filing separate. You're married, but you're not don't want to file with your spouse. You're head of household, you're single, and you have a dependent. Qualifying surviving spouse is your spouse passed away within the last 2 years and you have a dependent. So if your spouse passes away, but you have no dependents, you're not you then become single. But if you were married for more than 6 months or for part of the year, you still can file jointly. You'll file that year with a deceased taxpayer. So who has to file a return? So if you make under $16,400 and you're single, you do not have to file a return. If you're over 65, you can do $16,550. And that's where I make the error on our homework. It's Jesse was right. It's 14,600 was the standard deduction. And that's your filing requirement is that standard deduction because up the first $14,600 you make if you're single, you have no taxes on. You only get taxed once you make $14,601. Married filing jointly. Both spouses are under 65. You can make up to 29,200 and not have to file a tax return. If you're married filing jointly and one spouse is over 65, you can do $30,750 without having to file a return, so that you can have income up to 32,300 if both of you are over 65 years old. So married filing separate, any age, $5. You make $5, you have to file a return. Married filing separate, I'm going to say this every week, is the worst tax situation you can be in for the most part, for 90% of the time. So if you're married filing separate and you make $5, you have to file a tax return. You're head of household, and again, you're a single person with a dependent, and you're under 65 years old, you can earn up to $21,900 of income. And if you're head of household and you're 65 or older, you can have $23,850 of income. Qualifying spouse, again under 65, $29,200. qualifying spouse 65 or over is 30,750. And each year these are adjusted. I've never seen them stay the same 2 years in a row. So that's something. And one of the things I've uploaded, the cheat sheet. It's kind of a really helpful thing. Who qualifies and the income. Okay. So we have some special circumstances here. If you're self-employed and you make $400 in your business, you have to file. So a lot of times you'll have somebody starts a business in November and they only make $450, but they had $1,000 in expenses. They still have to file a tax return. Again, if you self-employment is over $400, you're going to owe self-employment tax if you're net earnings, but you have to file if you make $400. If you receive advanced premium tax credit, those are tax credits you receive from the marketplace when you purchase your health insurance on the marketplace. And that's been the big discussion right now, why government employees were on furlough because the Democrats and Republicans were arguing over the advanced premium tax credits. So that is, and that's going to happen throughout our lives. And it's happened historically. Government will hold up things until they want one thing passed or another thing passed. And October, November, they can change tax laws. I've seen tax laws changed in February and March, and we had to go back and amend tax returns, and we already did that year. So if you owe household employment tax, that means you hire someone in your home, again, like your nanny, gardener, someone like that, and you owe household employment tax, you're required to file. If you receive marketplace health insurance, you're required to file. These are the main reasons. There are more reasons, but these are the main reasons that you would be required to file a tax return. Sometimes you're not required to file a tax return, but you may want to. You want to claim a refund, like our example. The person was not required to file a return, but they were due a refund. If you don't file a tax return, you do not get your refund. So the IRS is not just going to say like, "Oh, hey, we owe you money." They're not going to. You have to file a return to claim a refund. You have to file a return to claim an earned income credit. And we'll talk more about earned income credits, but if you're low income and you have children, you can be low income and single and no children, get a small earned income credit. But if you have one or two children, three or four children, your earned income credit on lower income. And that's a credit that it's a refundable credit that you can get a refund even if you don't pay in. Um, and again, you want to claim any refundable credit, child tax credit, the American Opportunity Credit. All of these are refundable credits, even if you don't owe taxes. You can still get a refund, so we want to make sure you're filing a tax return. So you want to file even, a lot of times people say, well, I'm not required to file, but they withheld taxes. And I remember meeting someone who hadn't filed in 3 years and they were owed refunds. The problem with that is after the fourth year, the IRS will not give you the refund. But if you owe taxes after 4 years, you have to pay them. But if the IRS owes you money back and you don't file in 3 years, you will not get the refund. So we want to make sure people are filing returns, even if they're not required to. Your W-2s, your 1099s, all this information, and that is automatically transmitted to the Internal Revenue Service. They know how much you're making or not making. Okay, so we went over the 5 filing statuses that the IRS has that we can deal with. And then, and it's just, the basics of, what we can do. Um, so to figure out a filing status, we need to know the marital status, dependents, and who's paying the bills if we have depend, especially when there's dependents. I had a couple come in, well, a woman come in for years, and she filed head of household. She was a single mother with a child. Uh, Here, and she had a boyfriend that I knew about. So they had two children, they each took a child. I only did her tax returns as head of household. And I had to figure out the household support. She had enough income to pay the rent and support the child. They got audited on their dependents. And when the IRS called, the male said, "Oh, my wife." Here they've always been married, but filed head of household. Well, their returns got audited for way back. And they had to give all this money back because they got earned income credits. So one of the things we want to do is we have to document when we're doing someone else's return how we figure out their dependents, how we figured out filing status. Um, because the status is, if you're single or you're head of household, your tax rates are going to be lower. You can get more credits, you can get refunds. So we want to make sure when we're figuring out filing status, we're accurate and we talk to the taxpayer about that.
So was his dilemma a miscommunication between just like his relationship with, the person in the IRS, more or
Yes.
less?
Right. So when he told the IRS and called the female his wife and then she came to me and said, "Oh, look, we it was a shit show now because the IRS is sending them a ton of letters." And I said, "You
Right.
always told me you were single. When did you guys get married?" And here they had gotten married like 4 years ago, and she never changed her filing status.
Oh, okay. Okay, I see. Yeah.
Yeah. So she's been filing head of household, getting the head of household credit as a single parent, and so has he. Because he was filing head of household. So he made an error when the IRS called. He referred to her as his wife, which she was. Because technically, marriage certificates don't get filed with the IRS. They technically don't know you're married. But if you're caught, they,
Right.
like this couple was, then you're going to have, issues. So they should be
Gotcha.
filing married, filing jointly. And when you take two incomes and put them together, their earned income credit was less. So they had to go back and amend the returns. And the IRS will amend your returns for you, but they won't give you all the credits that you are eligible for. So you technically don't want the IRS doing your tax return, but they will. If you call the IRS, they'll help you and walk you through, but they won't give you any credits or deductions.
Okay.
So, yeah, so here we got the five filing status: single, married filing jointly, married filing separate, head of household, or qualifying spouse, surviving spouse. All right, so that's it. I don't know anyone who fits in another category than these. So single, not married. So in December, and everything goes by the end of the year, December 31st, they're not married. If you're legally separated or divorced at December 31st, you are single. Now, legally separated, some couples will be separated and in a process of a divorce, but it's cheaper for them to file jointly. And especially if they're amicable, they can file a joint return. It's usually better. But they can also file if they've been separated for more than 6 months of the year, they can file separate returns. And oftentimes that happens, and they would file as single because couples in a divorce situation usually are not always amicable. Um, so if you're single, you don't qualify for head of house or qualifying survivor and spouse. So if you're a young adult, you live alone, divorced individuals without dependents. So if you divorce, you're single. So married filing jointly is our next. So if you get married on New Year's Eve, you are married for the entire year. And you both agree to file jointly. It's normally the lowest tax rate. The problem is, as folks' income increase, we get hit with which is called the marriage penalty. So because you have two incomes, if both people are making over 150,000 and you get up to 300,000, usually if you get around 250,000 for a married couple, it can reverse. The tax rates will go up. You get the highest standard deduction. Pretty straightforward. You're married or you're not married. You know, um, we now have same-sex couples are legally married, so they will qualify as jointly. And some of the same-sex couples that we had the year after it became legal were very upset because their tax rates went up. It was they might have gotten other benefits being married, but for tax purposes, the marriage was not favorable. So separately, we talked about on Tuesday, you want to avoid your spouse's tax debt, liability protection, medical deductions, and student loan repayment strategies. There's certain jobs you can take to have your student loan dismissed. But if your income is above a certain level, and if you file jointly, it not automatically, but often will increase your income. People will file separately for a couple years to get rid of the student loan. Married filing separately, like we said, $5 of income you have to file. So there's a lot of disadvantages to filing separately. So head of household is our next. So head of household, you have to be unmarried or considered unmarried. So you separate it. You could be separated in the process of getting a divorce. You paid more than a half of the household costs, and you have a qualifying person for half the year, for more than half the year. So you're a single parent, you're a divorced parent with primary custody, you're an adult supporting your parent. For head of household, the dependent has to live with you, or you have to support them more than half of the year, except for your parent. Your parent does not have to live with you. So if you want to support your parent in their home and pay, you have to pay more than half of their expenses. You can claim them as a dependent. So qualifying spouse is qualifying surviving spouse. Your spouse passed away within the last 2 years, and you have a dependent child, and you have not remarried, and you paid more than half of the household support. One of the things with tax law, when you look at your PUP 17, they'll give you these, like you have to do A, B, C, and D. So, this means you have to do all of these things to qualify. So even if your spouse died, a year in this current tax year, but you don't have a child, you are not a qualified surviving spouse. If you have a child, but your spouse died 3 years ago, you're not a qualified surviving spouse. If your spouse died in February and you get remarried in June and you have a child, you're not a qualified survivor. You're now filing married filing jointly. So the benefit of this is it does use the joint rates. So do you have questions about filing statuses?
Is this stuff that the software will find that you were talking about in the first lesson? Or this is stuff that you kind of have to find yourself?
You have to find this yourself. So when you interview a client, you're going to ask them, are you married? Are you single? Do you have a spouse? Uh,
Gotcha.
you'll ask, if they have dependents. If they have dependents, they want them to know. But oftentimes people won't know, hey, I can claim my mother-in-law, you know.
Mm-hmm.
I, if you're paying for the mother-in-law's assisted living, And we often have couples doing that where the parents don't have a lot of money. You're paying for your parents' assisted living more than 50% of their support. You can claim them now as a dependent. So
Mm,
let's give you, it reduces your tax liability. And our job is to keep people in compliance and make sure they're filing correctly. Uh,
right.
I have a single guy, his mother's older in assisted living. He pays for the majority of the assisted living, about 80%. As a single man, he now goes from single to head of household. So his
Okay.
tax rate goes down.
Cool. Thank you.
Yeah, so it is, but that's the only person. So you can have a dependent, and we'll talk more about dependents, but for filing status as a dependent is a child, or for head of household, it has to be a child or your parent. Um,
Okay. So
yeah,
it wouldn't apply to like blood relatives and family, just
right.
okay, okay.
You can have a dependent, and we'll talk about dependents in a couple minutes, but you can
Yeah.
have a dependent, but they don't make you head of household.
Okay.
Let's say, you had a girlfriend that lived with you,
Yeah.
didn't work, didn't make any money, or maybe she made $500, $600. She can be your dependent, but she cannot make you head of household.
I see.
Yeah, so head of household has to be a child, and the child can be up to 23 if they're a full-time college student, or a parent
Okay.
that you support.
Gotcha.
Okay.
Thank you.
Yeah, sure. And you guys interrupt me if you have questions or type it in a chat there. Okay, so here's the decision. If you were married on December 31st, are you married, filing jointly, or separate? What do you think?
That would be separate, right?
Nope.
Okay, together.
Married, remember the last year, you can get married on New Year's Eve, December 31st, and you're married jointly for the year.
New Year's Eve and you're joined. Okay.
Yeah, so you can file jointly for the year. Qualifying child or dependent, automatically qualifying child, is head of household. And a spouse passed within 2 years and a dependent child. Otherwise, you're single. So if you're married on December, you can file married filing separate, but you're not single. Okay, who's a dependent? How do we determine this? So your dependent is a qualifying child or a qualifying relative. And again, we're gonna, if you take a look at your Pub 17, um, Pub 17 going into the filing status goes into more detail. But if you go to page 27, it gets into dependence. So this is where you can read this publication for more explanations. But so we have a test for qualifying child. So there's five. So it's a 5-point test. Relationship. The relationship child, sibling, descendant. Somebody. So it could be your grandchild. Can be a qualifying child. They have to be under 19 or under 24 and a student or disabled. So you can have a 30-year-old child that lives with you who's disabled and still be your qualifying child. And they have to live with you more than half a year. And you need to support them. You have to have more than half their support. So if you're getting child support through a divorce, it depends. How much does the household cost to keep up? And your household is your rent, mortgage, utilities, everything, repairs, everything it takes to maintain that home, and the food and education. Because the child, all the support for the child is the home, plus the education, plus transportation, medical, all of those things go into the support test. And a joint test, a joint return for a qualifying child. Your child cannot file jointly. So if you have a 18-year-old who is married to someone else, they cannot be your qualifying child, even if they live in your home. They can be a dependent, but they're not a qualifying child. So this stuff could get a little confusing. And the child cannot file a joint return with their spouse unless they're filing just for a refund. So maybe they're in college, or they're 18 or they're 19 years old, they get married. They can the parent can still claim them as a dependent, as a qualifying child, but they can't file a joint return with their spouse, the child. So we're going to go over each of one of these things independently. So relationship test is stepchild, foster child, sibling, step sibling, or descendant, grandchild, niece, nephew. So oftentimes you'll have families who live together. Um, Family member has a hardship, and you're taking in your niece and nephew. You can claim them as your child. If you foster children, you can claim foster children as your dependent. But again, if you're getting supplements from foster care for the child, you have to go through and figure out the income. Make sure you are supporting them more than 50%. Age test, 19 and under, 19 years old, under 24, full-time student, or any age if permanently disabled. Again, this is for a qualifying child. Residency, child must live with the taxpayer more than half the year. So if you have joint custody, if it's 50-50, you have to do it. There's a test to do who gets the child. But if somebody is the primary custodian and the other parent only gets the weekends, then the taxpayer who the child lives with gets to have that child as a dependent qualifying child. If you have a college age child, if you have a 20-year-old, they're over the age, but they're in school full time and they live on campus, kids go to camp. Those are temporary abstinence. They still count as living at home because when a child goes to college, they're young adult, they still use the home address as their primary address. So they're still considered a dependent. The support test. So the support is you have to support the child. And the child's unable to provide half of their support. Food, clothing, housing, school, medical. So everything we said before. And you have to pay more than half of it. Sometimes you have a child that has a trust fund from a grandparent that has income, and the income can be high. They may not meet the support test. So if the child's, making 50,000 off of their investments, they probably won't meet that support test. Hopefully, we run into those kind of clients, but that's not the norm in today's. You're not going to see that often. And then again, the joint return test. The child cannot file a joint return unless for refund only and has no tax liability. Like in our example, that there was no tax liability if that child was filing a return just for a refund. And then we talked about, what happens if there's a tiebreaker, 50-50. So the priority would be the parent over a non-parent. So a child could live 50% of the time with a parent and 50% of the time with an aunt or uncle. So the priority would go with the parent. Parents, if it's two parents, the parents with more nights. And we've actually seen clients who have to sit down and count how many nights that child's spent in their home versus the other parent because they're arguing. They can't, you know, um, unfortunately, divorce can be stressful, and so we kind of can get put in the middle of that, and you have to, have proof that that child was in your house more nights than in the other parent's house. If everything's equal and they have 50-50 custody, everything was equal, it's a higher adjusted gross income. So this is one of the things that, so if everything's equal, 50-50 custody, parents can't get along, you can actually ask the IRS to decide, and the IRS will go with a higher AGI. These are really important things, and we're going to talk about more about dependence. But when you first meet with a client, these are the things you have to figure out first. What is their filing status, and do they have dependents? So their filing status is going to matter, and then their income level. Do they have to file? 90% of the time, if they're coming to us, we know they have to file returns. So here's a qualifying relative test. So this is not your child, it's a member of your household. They can't be a qualifying child of anyone else. They have a gross income below the limit. And for So for 2024, the gross income was $5,050. So if they made $5,051, they could not be your qualifying relative. Member of your household, and you pay for more than half of their support. So if they're living with you and you're paying all the mortgage, the rent, the groceries, the utilities, and but if they're getting public assistance or they get Social Security, disability, it may be over $5,050 for the year, so they would not qualify as your dependent. So you always want to look at all of those things. Like, yeah, I take care of my uncle who's disabled, but he gets Social Security. So membership of your house that has to live with you. So this could be a parent, sibling, qualifying relative, parent, sibling, child, an in-law, cousins, anybody who is a member of your family. The gross income, again, what is their gross income? And it's going to adjust every year. Support, are you taking care of them? What does it cost for them to keep up their daily routine? We're not talking about like, if we're talking about the basics of, food, clothes, shelter. Or if they're your niece or nephew, are you spending money on education? So who cannot be a dependent? So if you have a boyfriend or girlfriend and they're not living all year, so if they lived all year with you, they could be your dependent. But if they didn't live all year with you, they can't be your dependent. Roommates, high income, earner relatives, your spouse is not your dependent. Co-parent without tiebreaker priority. So these are because you could have a co-parent who doesn't work or you're unmarried. Um, so if it was a co-parent, Maybe they are your boyfriend or girlfriend, maybe they're not. They're the co-parent of your dependent and they don't work and you're supporting them, you could still claim them as a dependent. All right. So qualifying child, age, relationship, residency, support, no joint return. Qualifying relative can't be your qualifying child. Relationship, residency, low income, and support. Make sense? Okay, so we're going to do some case studies. So we have Maria, 28 years old, unmarried, lives with her 4-year-old daughter all year. She pays all the household bills. What is Maria's filing status?
She would be she would be filing as single. Um, and then it says her 4-year-old daughter lives with her all year, so she would be a dependent.
So when we go back to filing status, we have head of household, single, married. So she's unmarried, so she can't be filing married. She's going to be single or head of household. So she has a qualifying child because she pays all the household bills. So she would be head of household. She wouldn't be single. Do you see
Good to
that?
know. Yeah, good to know.
Yeah. And then it is her daughter qualifying dependent. Yes. Under 19 years old. See where that makes sense? Okay. So James and
Yes.
Angela are married but living apart. No separation agreement, and they were married on December 31st. What filing statuses are available to them? They can file two ways.
They could do married filing together, or separately, married filing separately.
Correct. Yep.
And then the more beneficial would be to file together.
Yeah. Okay. So Lisa's husband died last year. She has a 10-year-old son, has not remarried, and pays all the home expenses. What is her filing status?
Qualified surviving spouse.
Okay. Yeah, there's five. And you're just going to get used to those filing statuses. Where do they fit? They have to fit in one of those. They're either
Right.
single, they're married, they have a child, so they're head of household, while
Okay.
married, filing separate. So, and then will her status change next year? Yes. Uh,
Yeah.
well, year two, she can still do qualifying spouse as long as she's supporting a child.
Okay.
So you get 2 years as qualifying spouse. This is a little weird because died last year. Well, okay, she was qualifying spouse last year and this year, but yeah, she gets 2 years of qualifying
Okay.
spouse.
So is that really just like a transitional period essentially before
Yeah,
you?
right. And you're getting a married filing joint tax rate, which so the tax rates, it's like you get taxed on the first lump of sum at like 10%. So when you're filing jointly, you get a larger amount of income that's taxed at a lower rate. So that's why she's getting a better tax rate.
Okay.
And right, it's a transition to okay, you're a joint, now you're a single parent, you go into head. She would then go into head of household.
Gotcha.
Okay, Robert and his mother. Robert supports 70% of his elder mother's expenses. She lives separately. What is Robert's filing status?
I'm guessing single because he um his mother lives separately.
Right.
She's not under the same roof.
But the only person that can live separately is a parent for head of household.
Okay.
So they can. But can he claim his mother as a dependent?
Uh, no.
Well, I'm going to say it depends.
Okay. Okay.
So, um, yeah, so he can claim head of household, but it would really depend on her income. She could have a lot of money and he still supports her. So if her income is over that $5,050, he couldn't claim her as a dependent.
Okay. Um, but the correlation of her living under a different roof, that really has no tie into the.
Right. Because
Okay.
yeah, because your parent doesn't have to live with you. The
I
child
see.
has to live with you, dependent.
I see. Interesting. Okay. Thank you.
If you want to claim your uncle as a qualifying relative, your uncle has to live with you, but your parent doesn't.
Gotcha. Okay.
And if you support, you know how they have the advertisements for these take care of your grandmother and you get paid to do that. So they're
I
now
might have seen something like that. Yeah.
Yeah, so the home health aid kind of things, if you take care of a relative in your home. So I have a client, new client, she came in, so she takes care of her uncle in her home. You are exempt. That income is exempt from income tax federally. So she makes about $40,000 as a nurse's aide, caretaker.
Right.
It's paid through Social Security, but he lives in her home. The income is then federally exempt. So that's one of the things people, a lot of people don't know that because you see that a lot. If they don't live in your home, the income is not exempt. So if you take care of your mother and you're getting paid to go to their house, and that's kind of moved that way because caretakers, it's a very hard position to fill. There's not a lot of caretakers, and a lot of people are caretaking for their parent. But if the
Right.
parent or the elderly relative lives in your home, your income from that Social Security income that you get paid to take care of them is tax exempt. And usually it's through an agency. Like there's a lot of agencies out there that will.
And remind me one more time that the income that's exempt is the income of that relative or the income of like the caretaker.
The income of the caretakers, you file a form saying, hey, I'm taking care of my uncle in my home,
Yeah,
and that income then becomes tax exempt.
I see. Thank you.
Yeah, so it's a really, because a lot of times family members do take care of their elderly relatives. And if there's no money there, they live in the home. The elderly relative is getting Social Security. They can also get the part of Medicare will pay for home care. And why not have your child? You can't pay for that.
Right.
So it's a really good or I have a client that does that for her uncle.
Gotcha.
So okay, Jenna has shared custody. 50% custody, child lived exactly half the year with each parent. Jenna pays 80% of home expenses. Can Jenna file head of household? She pays 80% of the home expenses, so she's paying more than 50%, and she has the child 50%. So sometimes, and this is a trick question, sometimes you can claim head of household and not claim the child as a dependent. Um, so, but they're saying technically, if the child does not live with you more than 50%, you cannot claim head of household. So that's one of our rules is the child has to live with you more than 50. So if the child only lives with you 50%, you cannot claim head of household. But the dependency claim would be go back to our tie breaking rules. You know, who, you know, who has the highest AGI, if the child lived in that. But and that's where people will go in and we need to count the number of nights that child stayed in your home. For who, if the couple, oftentimes once there's a divorce, the divorce decree will tell you, every odd year the mother claims the child, and every even year the father, if there's a joint custody. So usually with a divorce decree, but oftentimes if a couple's separated and there's no divorce decree and they lived apart, they can file head of household. And then and who claims the child. And you'll get parents who will file returns quickly and get their refund and claim head of household and the child when technically they weren't eligible for that status. And then when you go file the other parent's return, it gets rejected because they're claiming two people can't claim the same child. So then the one return will get rejected, and then you have to prove that that child you have custody and you paid more. The child was more than in your home more than 50%, and you paid more than 50% of support. So it can get messy, and oftentimes we see this a lot with divorce or children who live with grandparents. A grandparent wants to claim the child, and the parent goes and claims the child, or a parent thinks that the other parent's not going to file a return; they'll just go claim the child. So this can be messy with divorced and separated parents or unmarried parents. Right. So you see where when it's 50-50 custody, technically you can't claim head of household
Okay.
because you don't have the child over. You have to have the child in your home more than 50%. So you have to have 51%, one day more than the other parent. So, newlyweds, Aaron and Sam, married, December 31st, 11:59 p.m. What's their filing status? So remember we said they're married on December 31st. They're married filing jointly for the entire year. So,
Gotcha. So then, yeah, at that point they would be filing together.
right. Even though they
Um,
were only married for 1 minute in the entire year. Kevin is 22, full-time students.
yeah, parents pay 90% of expenses, earned 4,800. So, um, he would be a dependent.
Yeah.
Um, and then the parents, I guess they would, since it doesn't like specify whether the parents are divorced, I guess they could be like they could file single or together, or I don't know.
Right. They can file jointly or married filing separate.
Okay, jointly or separately.
But we don't even know if they're, and that's where one of the best answers for any tax question is it depends. So,
Gotcha.
because the parents, we don't even know if they're married. In this question, it doesn't tell us.
Right.
I have a couple more here.
Mm.
Divorced in November. Okay, so Monica's divorced. Two children live with her all year. She pays 100% of the home cost. So, what filing status is she?
My gut is telling me she's head of household.
Correct? Uh-huh.
Um, and then does ex-spouse get any claim? No, because no, yeah, because she was living with the children all year. So I'm assuming because of that, the ex-spouse, like, since there is in custody, they wouldn't get to claim.
Right, because she pays 100% of the home cost. There's no, and the children lived with her the entire year. Now,
Yeah.
there is a form that, especially like if a child lives with a grandparent, or in this case, if the spouse had visiting rights, there's a form 8332 that you can file and say, hey, I'm giving, you know, my husband the right to claim this child. So you can file that, but in this case, Monica has every right to the child, both children, and head of household. Terrence supports his 30-year-old son fully. Fully. Son is not disabled.
Okay.
Is the son a dependent?
Because I'm not sure like if he lives at home or not.
Right.
Um, I guess not. I guess he would be, or is that one that's kind of 50-50 where you can't really
Well,
tell?
yeah, well, it depends here. Does a child live at home?
Right.
And is there any income? The support test. So you could fully support your child, and the child's still earning 30,000 in income. And there's parents who do that. They support their child, but the child has income
Right.
over $5,000. So, no, they can not claim it. So Terrence and Terrence would not qualify for head of household.
Okay.
So Terrence would file single and the son would not be a dependent.
Okay.
So, okay, Diane hasn't lived with her husband since February. She supports her 6-year-old daughter. Is she considered unmarried? So we didn't talk about this much. So I'm gonna talk about it a little bit here. Is she is considered unmarried because it's been over 6 months that she hasn't lived with her spouse. So for tax purposes, and she has a child that she supports. So she can file head of household, or she could file married separately or married jointly. But it would behoove her to file head of household and just be taxed on her income. And so all of these things, like like if you're married at the end of the year, you're considered married for the whole year. But if you're separated for 5 months, you're still considered married. If you're separated for 6.5 months, you're considered unmarried. So a lot of these criteria can be confusing. So you want to always make sure to like recheck it if somebody's close to the criteria. Oh, I've been separated from my husband, my wife for 2 years. We're still married, and I have a child that I support 100%. Well, that's kind of easy. You're head of household.
Right.
No argument. But when oh, it's 5.5 months, maybe on 6 months, you have to go back and say, okay, when did you move out of the home? And usually if you don't trust answers, like if your gut is like, I don't know if this person's telling me the truth, then you want some kind of proof. We,
Gotcha.
for every child, no matter, even if they're married, filing jointly, and they're declaring their children that this couple, and that they have this child, you still need proof that that child lives in the home.
Mm-hmm.
And that's done by getting a letter from, a school with it being mailed to their home address, a church, a doctor's receipt, anything can do that. You'll need social security card. So your first time you do a return for someone, you need to prove their dependents. There's been a lot of fraud with dependents where before you didn't have to prove a social security number. And I had a friend who used to claim her dog as a dependent, and she took the dog to a chiropractor and claimed the chiropractor as medical expenses for their dependent. But now, and that's before 80, I don't know, 85, you could claim a dependent without a social security number. So now you have to have a social security number to declare to claim a dependent.
Wow.
Yeah, so and then if you're a paid tax preparer or if you're working at a volunteer income tax center, um, you have to get proof that you can't just trust somebody. Oftentimes, especially the worst cases, people will claim other people's children or, hey, I don't, so and so has a child, but they don't file taxes. I'm going to claim that child. They can do
Gotcha.
that on their own, but not don't accept that as a paid tax preparer. So this is one area with dependents that the IRS comes back down on us as the tax accountants, the tax preparers, uh, to prove the children.
Wondering if there was another assignment.
Read about the dependents and the qualifying dependents and filing status in your Pub 17. The IRS has samples on their website, and so does Drake Software, where you
Okay,
and as we go on and we get more information, I'm going to give you more samples and homework to do, and your final exam is going to be a tax return to do by by fill it out by hand, and we're learning, you know, I'm teaching this class to fill out the forms so that you know what the forms are.
yeah,
In practice, we're not going to be writing out these forms. But it's really good to just, like you're saying, when you're going over the form, you're like, oh, what's this line? What's this line? So as you read the line, you'll know what goes there and you'll get
yeah,
familiar with the forms.
cool. That sounds good.
Yeah, read Pub 17. I think we started on like page 21, but it can get really boring.
Okay,
But it is it is a good resource just so you know where the answers are for these questions.
for sure.
So, all right,
All right, sounds like a
I'll
plan.
see you this Tuesday. Yep.
Yep, see you Tuesday.
All right, take
All
care.
right, yep, bye-bye.
Bye now.